These are my top 5 companies that I would be confident in holding forever. I would be happy to put $1,000 into these investments and never touch my portfolio again, and I would be confident that they would make me money. They are some of the biggest companies in the world. There's definitely other companies that are very profitable that aren't on this list, but it's just my personal top 5. So jumping straight in, number 5 is Amazon. While other companies were crippled by the pandemic, Amazon flourished. The strength of the company can be related to its business model and the way that it's been consistently changing the world. It first introduced online book sales back in the 90s and now has definitely branched out predominantly with its online e-commerce platform, cloud computing and web streaming service through Amazon Prime, which alone has over 148 million users. Around the world on a monthly basis, there's 197 million people that use the Amazon platform. That's over 2.5 times the population of the UK, so you can definitely see how big Amazon is and the steady growth that it has. Over the past 5 years, it has gone up 252%, meaning that if you had invested $10,000 5 years ago, your portfolio would be worth $25,200. Number 4 is Google. This powerhouse of a company controls 92% of the world's internet usage, having 4.3 billion users out of the 4.7 billion that are actually available to use the internet. This search engine, much like the internet itself, is heavily ingrained within society. Telling someone to Google it is a commonly understood phrase, and the vast majority of the world uses the internet. It also owns YouTube, which has 1.9 billion users each month and is one of the fastest growing social media platforms. The strength of Google can be reflected in its stock price, which over the past 5 years has gone up 210%, meaning that if you had invested $10,000 5 years ago, your portfolio would be worth $21,000. Google is one of the largest companies in the world with a market cap exceeding $1.7 trillion. Google makes the majority of its money through showing targeted ads to users. This means that in uncertain times, like those presented by the COVID pandemic, Google can still make a very consistent stream of income. No matter what's happening in the world, we can assume that people will be using the internet and using the Google platform, meaning that it will always have a way to make money no matter what's currently happening. It doesn't rely on selling a physical product or having stores open. It's all done online, and since virtually everyone uses the internet, everyone has to use Google, meaning that I would be very confident in holding this company forever, since it's hard to think of anything that could really hurt the business's profits. Number 3 is Tesla. Now, the majority of people who invest are familiar with this company, and it definitely has a cult following behind it. It was one of the fastest growing companies through 2020, and I think there's definitely still room for it to grow. Investors like Cathie Woods, who owns ARK Invest, has a price target of $3,000 per share over the next 5 years. Currently, Tesla shares are valued at just over $1,000, so there's definitely still room for it to grow. In 2020, it sold close to 500,000 vehicles, making it the most popular electric vehicle manufacturer. Tesla is definitely not only an electric car company, it's branched out into renewable energy through solar panels and wind farms, started to integrate cryptocurrency into its business, and now with Elon Musk buying into Twitter, there's countless possibilities for the company. It has been one of the fastest growing companies with a 5-year return of 1,582%, meaning that if you had invested $10,000 5 years ago, your portfolio would be worth over $158,000. Through 2020, Tesla made up the majority of my investments, and it's one of my favorite companies. I'm happy to keep putting my money into it and hold it for the long term no matter what happens. Jumping into number 2, which is Apple. This is the first company to reach a market cap of $1 trillion. Even great investors like Warren Buffett put their money into it, and it also pays out a dividend of just over 0.5%. Now, this definitely is not the highest dividend payout that you can get with a company, but tech stocks normally never offer something like this, and Apple has been consistently paying out their dividend since 2012. It's just a reflection of how much money the company actually has, and currently it's the largest company in the world with a market cap exceeding $2.7 trillion. Apple products from phones, laptops, smartwatches, and even self-driving cars are all part of the types of services that Apple offers. You can't seem to look anywhere without spotting an iPhone or looking at one of the products that Apple has made. Across the globe, there's over 1 billion people that are actively using Apple's products from phones, smartwatches, and laptops. And over the past 5 years, its stock price has gone up 363%, meaning that if you had invested $10,000 5 years ago, your portfolio would be worth $36,300. Apple Apple's profits have been consistently increasing year by year. In 2020, it made $294 billion in revenue, and this was up in 2021 with $378 billion. This price performance makes it a staple in my portfolio, but it's not quite in the number one spot, which is GameStop. This company has gone up 1700% in just over 2 weeks. No, just kidding. The number one is VOO, or the Vanguard 500 Index ETF. You can't directly invest into the S&P 500, so you have to put your money into an ETF equivalent like Vanguard, which sole purpose is to just mimic the performance of the S&P 500 index. This is a collection of the top 500 biggest publicly traded companies in America. When you put your money into this, you're essentially buying a whole piece of the overall stock market, and your money will be divided amongst the biggest companies in the world. VOO includes all the companies put on this list. It's the most consistent and reliable way to make money in the stock market, with an average return of 10% every year. This has been the case for decades, but of course other years can be better or worse. Over the past 5 years, it's gone up 80%, meaning that if you had invested $10,000 5 years ago, your portfolio would be worth $10,800. With the average increase of 10% each year, it will take just over 7 years to double your money. With this investment, there's no one actively choosing which companies are included. It's all based on the market cap or the size of the business, and this means the management fees are very low. In fact, VOO will have a better performance than the majority of hedge fund managers, which are actually paid millions of dollars to look after other people's money. It removes a lot of the stresses that people associate with investing, like perfectly trying to time the market, looking for the best buying and selling points, and thinking they have to spend hours researching a company. The best way to put your money into VOO is just to set up an automatic payment so the money is taken out of your account. This will allow it to grow consistent compound interest and always make a profitable investment for you. It can take a lot of time for people to be confident to invest in VOO because they're looking at other types of asset classes like cryptocurrency or growth stocks, which can see a far more rapid increase in price. Having an ETF that tracks the S&P 500 is always a part of a balanced portfolio, and great investors like Warren Buffett swear by it. It's one of the easiest investing strategies, making it my favorite pick as my favorite stock that I would hold forever. If you've made it this far into the video, make sure to drop a like for the YouTube algorithm. Now that you're familiar with my top 5 stocks that I would hold forever, you might be interested in looking at my top 5 ETFs that pay out a dividend on a monthly basis. Check out this video on screen to see the best dividend yielding ETFs that will pay you out money every single month.